share my screen and let me know if you can see the screen as well. Okay. Right. So every company is required by the SEC to file their 10K at the end of each fiscal year and their 10Q each quarter. Now, gosh, SMCI was supposed to refile this back in August last year. So I believe it was August, either August or October. I think August, yeah, because it dropped heavily during August. Or maybe, either way, they were required to file their 2024 10K. They did not. So the company that was auditing them, Ernst & Young, which is an accounting firm, pretty much came out and said, this is a pretty suspicious company, let's say. Not suspicious company, but there's some stuff going on which, might not be legitimate, might not be allowed, all that kind of stuff. And, well, SMCI followed up by hiring a new CFO and just pretty much saying that they're going to file their 10K soon enough. So SEC gave them a deadline until February 25th, 2025 to file this. Otherwise, they will be delisted. So pretty much, and it's really, like I said, it's really stupid, but a lot of people were thinking that SMCI were not going to file their 10K by today, February 25th, 2025. Obviously, after hours, what happened? SMCI filed their 10K, the SEC received the filing. And of course, because of that reason, just because of that simple reason, the stock flew up, 22% so far after hours. Now, funny enough, they didn't actually meet their revenue expectations, so that's a miss already. But either way, just purely because they filed their 10K at the end of their fiscal year, even though it's late by the deadline, people are excited, and the market has pushed up that stock. So it is up 22% right now. It's eating good. I mean, yeah, the last couple of days it's tanked because people were like, oh, our SMC guy going to file in time, this and that. I stayed away from it because I don't know what would happen. Like, I wasn't sure even if they filed in time, the stock would die. I wasn't sure what was going to happen. I thought they would file in time because I'm like, there's no chance they risk getting delisted. But either way, even though they filed in time, I didn't expect this to fly like it did. So yeah, that's it for SMCI really. Expect it to run the next few days. I would say I'm 70 to 80% sure that stock is going to run for the next couple of days. It's taken a big hit the last few days because of the uncertainty around their filing. And it's definitely a stock to watch going into tomorrow, Thursday and Friday. So yeah, that's pretty much it for SMCI. They've filed their annual report for last year, and there's no worries around that right now. So they're obviously not going to get delisted. Yeah, I mean, we'll see how it opens tomorrow. I'm intrigued. But once again, if SMCI can run, maybe some of the NASDAQ stocks can run as well. So you might see NVIDIA finally move, AMD finally move, all that kind of stuff. Either way, that's it for SMCI. Like I said, just probably look at calls, look how it reacts to the positive news. Again, even though their earnings was not amazing, people are probably going to start buying into this stock, buying shares, getting into the stock purely because, again, they are not getting delisted. So congrats to everyone who holds SMCI. Whether you knew or you didn't know what was happening, all good, all good. So let's talk about entries and exits. So one of the first things I want to say when it comes to entries and exits, right? And like I said, if you've got tickers you want me to analyze, just throw them in the chat. But one of the first things to know about entries and exits, one of the very first things is no matter what happens, you got to have a few things in place, right? So this is the let's do this. Let's go to a stock that I trade pretty often, QQQ. Okay. First few things you see on QQQ, right? You see a white line, a blue line, and a red line. These are key levels, right? Key levels. So in every entry and every exit you need to have identify some key levels. Added to that, you need to have a strategy. So am I day trading? Am I swing trading? Am I scalping? Am I holding for 10 minutes? Am I holding for 2 hours? So strategy, and you also need to have a plan. If I'm up 40%, am I taking profit? Am I holding until 50% and then selling off 2 contracts? Am I trimming at 10%? It's a plan. If I'm down 20%, am I cutting? It's all that. That's having a plan. So you've got to have key levels, a strategy, and a plan. Now, beware. because these key levels are drawn on the daily chart, right? These key levels are drawn on the daily chart. But, oh, okay, hold on. Let's see. Okay, just thumbs up the comment if you can, thumbs down if you cannot. If you can, then, we'll continue. If you can't, okay, so 4 people can see it. Yeah, yeah. Just like you said, leave and come back. Yeah. Thank you guys. So, okay, only one person can't see it. In that case, I'll keep going, and if it's more of you, just let me know again. Thank you. So again, SMCI, sorry, SMCI, QQQ on screen. Again, you need to have key levels drawn out, a strategy, and also a plan, right? But the thing you want to be careful of is different time frames will tell a different story. So you got to have your timing on point. So pretty much what I mean is like there's 1,000 ways to execute, but if you don't know what you're doing, you're going to make mistakes. So if you're looking too short at a time frame, you're going to miss out on what's happening on the bigger scale. If you're not looking at the overall trend, you focus on what's happening intraday like this. This is 15 minute. You focus on what's happening intraday, you're going to miss your play. So again, zoom out and understand what overall trend you're looking at. So for example, here's Apple. Apple is overall bullish right now, while the rest of the market is bearish. Apple is continuing to rise on the daily time frame, whereas others are selling off, right? Apple was 225 at the beginning of the month. It's now 247. Overall trend is bullish. What about on a smaller time frame? This is what I mean. 15 minute, you had some bullish momentum today, some bearish momentum. Yesterday bullish, other days bullish and bearish. But overall, if we zoom out, Apple on a bigger time frame is clearly bullish right now. For this month, it's bullish. If I go to the monthly candle or the weekly, if I go to weekly candle, 3 green weeks, right? Each candle here represents a week, 3 green weeks. If I go to the monthly candle, right? Nice and green, right? That's fine. So again, there's like 1,000 different ways to trade this market. Legit, somebody can tell you I'm getting QQQ calls today for an intraday day trade for like 2 hours, and overall they know that they can't swing puts. That's fine. You can still swing puts and then day trade calls. There's 1,000 different ways to trade the market. There's 1,000 different ways to trade each stock. So overall trend though should dictate what kind of trade you're going to take and how long you will take it for. Okay. The reason I say that is because again, QQQ right now, 4 red days in a row. It's bearish right now. Moving averages 9 and 21, crossing to the downside. It's bearish. But did I manage to double up the money on a call today? Yes. So the thing is am I gonna hold those? Well, obviously it's 0 DT. Would I hold those calls until tomorrow? No, because I expect QQQ to come back down. So again, overall trend right now, QQQ is bearish. Every time we look at this, it's getting worse and worse and worse. It drops $27. It can still drop more. But what else did I say? Key levels. 510 is a key level for me. We wicked off 510 today. 503 is another key level for me. We might sell off to 503, right? 517 was a key level. We slide through that, right? So before I enter a trade, because you're probably wondering what am I actually looking for? Before I enter a trade, there are a few things that I look for. One is an EMA crossover. Here we go, crossing to the downside. Sometimes it's a pullback. So if I want to trade, I'm going to pull up a new stock, right? I'm going to go Tesla. If I want to trade Tesla to the downside, your pullback is inverse. So for example, if you trade something to the downside, it's bearish. Your entry is when it does the opposite to the overall trend. So it's pushing up to come down, pushing up to come down. So my entry would be one of these green candles when it goes up, right? That's a pullback. Sometimes what I'm looking for is consolidation. This right here is a little bit of consolidation, kind of slightly consolidation, right? 3 or 4 days consolidation. That's another thing I look for. Sometimes, for example, hymns, right? I will look for a pullback to previous highs. So when hymns was pushing up, I look for the pullback to the previous highs, take it higher, pull back to the previous highs, take it higher, pull back to previous highs, take it higher, pull back to the previous highs, and eventually, yeah, it was going to come down. What else do I look for? Support and resistance. Again, just putting up random stocks. AMD, so you can see different things. AMD, support and resistance. Resistance around here, the moving averages. Support at this level. Support at this level. So those are the kind of things I'm looking for. So ignoring all my specific support and resistances, my charts, right? If I give you a naked chart, I think Walmart's not really naked. Let me take another stock. We will go with Nvidia. I think that might be naked. No. Let me see. What's a Neo? Chinese stock, right? Okay, Neo. If I give you a naked chart, right? I say I want to get into Neo, right? Oh well, right now, let me look at the EMAs. They could be about to cross. Okay, keep that on watch. It could be crossing to the downside. Let me look for key levels, and I'll draw them out. Support and resistance. Where's the key level? Okay, down here, key level. Okay, where's the key level? Where's the next key level? It might be actually here because this is support right here, right? Key level. Like you would look for key levels and say, okay, you might move it a little bit, but you look for key levels before you enter trade. You might look for a pullback. You might look for an EMA crossover. You might look for support and resistance. You might look for a zone. These are all things you want to identify. Look, I had a zone on Tesla. I've had a zone on Tesla for weeks. These are all things you want to identify. Last time it consolidated, back in November, it consolidated in this zone. It broke out. It came back to the zone, tried to break out the zone, failed, and sold off, right? It's so many different things that different people look for. But I got to tell you, my trading strategy, I'm going to look for a few different things, whether it's an EMA crossover, whether it's a pullback, whether it's consolidation at the daily or the 4 hour, whether it's a pullback to previous highs like Palantir did, pull back to previous highs, constantly pull back to highs, push up, pull back to the highs, push up, pull back to the highs, broke below. I wouldn't enter here. Wait for it to push up again. So many different things like that I will look for, right? And when it all lines up, it makes the trades a lot easier. But at the same time, it can be complicated. You know why? Because what can happen here, right? People can try and get into puts. Why? Because it broke below the moving average. That's fine. But how long are you getting into puts for? Oh, well, it pulled back to a previous high again and actually jumped up again. This is a momentum play. Again, HIMS as well, momentum. People are all buying it. It's getting hype on social media. They're like, oh, okay, HIMS is the only one that can do this, that. It gets momentum. Wait for the pullbacks before you get in. Pullbacks, get in. Pullbacks, get in. And eventually you got to understand a stock that goes from $24 to 67 to $70 is going to pull back. It's going to sell off, right? And I'll be honest, I didn't even look at HIMS this week because I know it's overbought, right? So it was actually an opportunity for puts, but I didn't look at it. Doji as well here. But I didn't look at it because I know what's happening. I know it's selling off this week. I didn't realize it dropped 22%. So actually it was a good opportunity for puts, but I didn't even look at it because I know stocks like this, when it pushes up, it's going to come down, right? Stocks that are overextended, already far high up, are due to pull back. People are going to take profits. Hedge funds are going to sell. People are going to cover their position. All those things are going to happen. Same happened with Palantir. If you go back to my watch list from last week, I said 122 and 125 were my price targets before the week started. It hit those price targets. It went past 122, hit 125, right? And what happened there? Topped out, sold off. We've dropped $33 right now, right? I'm telling you, all these stocks do pretty much the same thing. Like, it might not happen at the same time, but all of these stocks pretty much do the same thing. So, right? So I just refreshed my screen, by the way, for those who couldn't see it, because I know some people couldn't see the screen. So I just refreshed it. Maybe it does work now. Let me know. Okay, yeah. Sometimes it can be a bit strange. All right. Yeah. For those, unfortunately, if it's still not working, I think don't worry. The recording will be posted, so you'll be able to see it on there. But either way, like I said, with Palantir, again, price targets were 122, 125. 125, it sold off. It didn't hold the moving average. It sold below the moving averages. Moving averages are starting to cross to the downside. That's a bearish symbol, right? That's called a death cross when a moving average crosses to the downside, right? Like a 9 and 21 or a 15 or 200 when it crosses to the downside. That is a bearish signal. Okay? So again, we're talking about entries and exits, right? How do I know when to get into calls? How do I know when to get into puts? Let's go with QQQ today, right? QQQ. So, as I said earlier, I have key levels. 510 is a key level. When you're looking to get in calls, it doesn't have to be precise. It's more about an area instead of a specific price, right? Your entry might be around 510, but it doesn't have to be 510 and 17 cents. It doesn't have to be that. But around 510, when you see an inside bar, when you see a doji, when you see any kind of reversal pattern, when you see a double bottom, just understand, well, as it starts to gain momentum, you can get into calls, right? We sold off. Today is Tuesday. We sold off. Okay, we sold off from what, 520 to 510. We dropped $10. Doesn't mean it's gonna come up straight away, but you have to watch. All right, I have a key level at 510. Let me trust this level. Let me watch price action. All right, we wicked below on the 50-minute. We started to build up. Okay, we got to the moving average. We closed above. All right, that's a bullish sign. It's a positive sign. Closing above the moving average. All right, this is what I did. Red candle, because if you're getting in calls, you want to get in, for me, on the red candle amongst the green candles. Red candle starts pulling back, starts pushing up. All right, I'm going to get in, take the calls, 100% returns. On the other side, bearish, right? Bearish. We're talking bearish, right? Puts. Why do we get puts at the open? So it sold off. Sold off. Pushed up a little bit. Broke below my level of support. Came back to test it. Got rejected. Sold off. Puts were up, I think, 270% at the highest. But it hit my next level of support, right? So it sliced through my first level of support, came to my next level of support and bounced. Key levels. Again, key levels. Now, moving averages here are converging, right? Going closer together. Once we get to this level 517, we might either reject again or push up. I think we don't even get to that 517 level yet. We're going to come back to test this 510 level. And again, when you're getting into these calls or puts, you want to enter an area. It's an area. It's not a specific price. It's not, oh, I missed it at 510.17, or oh, I missed it at 510 wherever my support is, or I missed the puts at 517.21. Nah, it's an area, okay? On the way up, on the way down. It don't have to be an exact specific price point, right? It looks like a 5-minute double bottom as well. So when you look at getting out, how do we look at getting out of puts, right? Today we took puts, right? We took puts down. Do I get out my puts here? Maybe no, because it's going to slice below, right? You could, because it's a good level, it's a key level. And maybe it's going to slice below. Once you see the green candle, once you see it start pushing up again, you should know, okay, and you see the close above the moving average. All right, maybe it's time to get out the puts. We've dropped $9, $10. It's starting to rise $2, $3. It's best time to get out, right? Because we lost all this. We recovered quite a bit of it before we sold off again. So if you're in the puts, there's two things I'll talk about. It's the percentage. If you're up 250, 300%, 100, even 150 on a 0 DTE when it's same day expiry, get out, right? But if you're in a play and you have a nice level and it hits that level and comes up again, just get out as well. Puts. What about calls? How do you know when to get in, get out? Well, calls, get in, again, green close above the moving average. A little bit of a pullback before it's looking like it wants to go higher. Good entry points. Here now, where do you get out? Well, you got the moving averages. It's getting rejected by the orange line, right? The orange line is the moving average. If you're getting rejected by the orange line, it means it wants to come down again. Get out anywhere here. It's giving you, look, if I go to the 5 minutes, it's giving you many opportunities, right? On calls. It's giving you opportunities up here, up here, up here. It's giving you multiple opportunities. Even at the end, they gave you another opportunity. Get out your calls because it's looking like it's trying to go down. Tweezer tops here. 15-minute again. You can just flick between the 15 and 5-minute. You can just switch between them two. All right. Rejected by the moving average. Wicking off the moving average. You can get out of the calls because it means that price don't want to break above. Right. It's not like here. We went up to the moving average. We closed above. We kept. We call it stair stepping. Here we got rejected. We got rejected 3-4 times. Price wants to come down. Right. It's a lot of selling right there. A lot of selling right there. So again, please just understand that when you're getting in calls, and again, two things. If you're up 80, 90, 100% in a day and it's expiring the same day, you can get out. You can leave it running. You can trim. If you're getting in and you see price reverse and start, gaining momentum, catching heat, get out, right? And once again, it's a general area, right? Like, we say this all the time. Let's say we were in the puts. Let's say the price went all the way down to 508. That's fine. My level here is 510. If price reaches that 510, I don't mind getting out with 2 or 3 or 4 contracts, whatever, the majority of my position, because again, I have a key level for a reason. If I get out and price goes to 508, I can handle that, right? I'd rather get out way too early than hold and then be back at break even or down, 20-30%. So make sure you just don't be greedy, get out when you're supposed to get out. And then, if you have to miss out on opportunities of legendary numbers, that's fine. But it's better to just do your thing, be smart, and move on. It's better than, again, holding, over leveraging, sticking in too long, and then coming out like all upset. So don't do that, Any questions, just let me know. So what I was saying was, every time you get in a trade, you got to have a plan, right? You got to have a strategy. If this breaks above the moving average, I'm getting out of my play. If this drops below level of support, I'm getting out of my play. If this hits my level of support and bounces, I'm getting out. You have to have a general idea of what you want to do. So like I said, with the way I trade, today it worked out, right? I got the puts, I got the calls. On another day, my level doesn't mean nothing. My 5 level doesn't mean nothing. On another day, the puts goes 5,000% and I left too early. The puts goes to 504 and I left at 510 on another day. But I have a level, I have a proper mentality, and I have risk management. That's what I know. So again, I don't mind missing out on opportunities if I'm taking profit way too early instead of being back at break even or in the red. I don't mind if it's starting to rise. I'm gonna get in the calls then. If I want to be in the play that bad, I'll get in the calls, ride it up a little bit. Come on, man. We smacked 280% and then 110% on QQQ both ways. Come on, we smacked it both ways, So with my entries, right, I'm pretty conservative. What do I mean by that? So obviously let's go to SPY. Let's just switch it up a bit. So when I say I'm conservative, what do I mean? Right? Yesterday. Well, SPY has actually been different to QQ. That's funny. But okay, look, conservative, what I mean is Friday, right? SPY dropped off, came back, dropped off, came back. I might not get into SPY puts. In fact, I think Friday I was late with SPY puts. I didn't get in here. I wait for it to come close to moving average. Price comes close to moving average, then drops it. That's cool. But to know that, right? I'm going to go on the hourly. I'm going to go on the 4-hour. So this is Friday. This is Friday, right? I'm going to hourly. I'm going to go on the 4-hour. I'm going to see how it's breaking down. I'm going to go on the daily. Oh, and I see how it's breaking down. Okay. So if I know it's bearish and it's dropping daily and Trump's messing up the markets, cool. I didn't get in at open. I didn't get in at 15 minutes into open. I didn't get in half an hour to open. Oh, I didn't get in 1 hour to open. Cool. I don't care. I'm not buying puts down here at the low. I'm waiting for it to come up a bit. I'm waiting for a couple green candles. Then it gets rejected by the moving average again. I'm in. Right? I'm in then. So when I say my entry is conservative, I'm not getting on the first couple breaks. Not always. Right? But I will get in on the fake push up, the fake, the retest, or vice versa if it's the pullbacks. I'm never going to get in always at entry, right? Sometimes I'm going to wait for it to come back. Again, I missed a $5 drop Friday, but it pushed up $2 and then I got in on the next $6 drop. That is fine, right? If something is getting rejected every time it reaches a certain level, I know I can get puts. If something is bouncing every time it reaches a certain level, I know I can get calls, right? That's why we have price targets. That's why we have zones. That's why I use the MAs to navigate, right? So if I got inputs here, right, and price pushed above the moving average, I'm getting out. If I get in calls here and price starts to break below the moving average, then I will get out. I'm using the moving average just to navigate, to give me an idea of what's happening and what I should be doing, what I should be looking to do, right? So that's kind of all day trading stuff. And the thing is, it takes confidence, right? It's easy to say, oh, now while we're on live and we're just, reviewing it after hours. But let's be honest, right? Let's be honest. If I look at a Tesla, and I put this in the chat for you guys for weeks on end, right? I said, this stock here, I said at 370, I remember. So when it came out, this 378, I said, this is going to 300, right? Cool. It dropped into my zone at 328, and I'm like, okay, we're going to fall out the zone, we're going to drop. Nah, it pushed up, it ran up $30 to the top of my zone, then sold off. So someone like me, even if I missed the first drop, like I told you, I still have a price target, I have a key level. Once it pushes up, now I'm gonna get my puts and it drop, right? And now that it's falling out the zone, I'm gonna see what it does at the moving average. It might, it might continue going on below, but it might bounce here. But either way, at 378, I said I'm looking for the drop to 300. It dropped to 328, came back, and if my zone wasn't here, people might be like, wait, why is it coming back? Well, either way, inside the bar, I don't know. That might be the reason. Up here, a doji, consolidation, drop. And we are back at my $300 price target. We've hit my $300 price target, right? Here I used my support and resistance to navigate. I used my EMAs to navigate. I used a good key level, a price target to navigate, right? And that's what I mean when I say let your trade work, build confidence, right? Along the way, you can adjust if you need to, right? If you get in calls if you get inputs at the wrong point, you can take profit, and then once it's finished, it looks like it's consolidating, or it's finished rallying up, you can get in the puts, right? But again, it's different things like that. It's putting different pieces together, right? It's the same with everything, right? Here, like I said, I'm looking for the EMAs. They crossed the downside. Check. We broke out of this trend. Check. We sold off into my zone. Nice. We pushed up, came down. But it's going to take time for you to spot how to draw a zone. It's going to take time for you to know, oh, this is a short-lived rally, like we had with QQQ today, So people will get trapped here because I say it's puts. It's rallying. People are like, okay, I'm going to get calls. It holds on the zone, consolidates, drops. People will get trapped, right? It's normal, right? So again, my trading style is conservative. AMD is a great example. Long term, I'm investing in AMD. Cool. Short term, we said it last week. I think it was 111. I'm going to see. Yeah, I think it was somewhere here. Maybe, 113, 114 maybe. We said AMD is bearish. Don't let this look. It push up, sell off, push up, sell off, push up, sell off, push up, sell off. Pushes up last week, and what did I say? Well, it's still bearish, but I'm going to buy shares. Pushes up, sells off $10. It's at my level, right? Close below my level of support. That was pretty obvious. Not because it's happened now. I could have told you a week ago. In fact, I did tell you a week ago. I could have told you 3 weeks ago what was going to happen. Like, it's all there. Like, it's all happening continuously, right? If you zoom out and ignore all my colorful lines, if you zoom out, do you not see how this stock is just dropping? It's making lower highs, lower lows every time. Like, it's just dropping, right? And if you look at the overall trend, if I look at the weekly chart, so each candle represents 1 week of price action, right? It fell out of my trend. I drew a trend line from the highs and then from the lows. It fell out of that and started selling off, right? And I have many lines on this chart, and I'm still buy long-term shares for AMD because I do believe we'll get back to 190, 200, and so on. But again, all this is like putting pieces together. AMD looked nice for a few days for some people. They said, yeah, AMD's back. I said, I don't believe none of that. Sold off, right? And again, it's putting pieces together. AMD, every time it reaches the moving averages, sells off. Get rejected, sells off. Rejected, sells off, right? You put that together. Draw a line of support for the next, for the next level that it will hold. Understand that the moving averages are continually diverging, always moving away from each other. They already showed this for how many how many months now? Like 3 months straight. Like we had the death cross, and since then they're converging. They're not diverging to cross over to the upside. The moving average is 9 and 21. The green line and the orange line diverging. They're staying away from each other, but they're just showing again bullish. Sorry, bearish, bearish, bearish. Down, down, down. So again, like I said, let your trade work. Build confidence. I've seen a lot of you do it. You know, you get into the markets and you build confidence and you start shining. But those of you who let's say don't go back to basics, don't do what you're used to doing, you suffer. Trust me, you don't need to suffer. It's just like, you know, like if you like seeing a stock, having a plan, having a strategy, letting it play out and building confidence is all like, let's say you're playing basketball, you know. You learn, someone throws the ball to you, you learn how to shoot. The next day you dribble in, you stop, you shoot in. Next day you dribble in, you stop, you jump, and you shoot. The next day you might dribble, now you add in a hezzy, step back, you shoot in. Now, and the next day you might dribble, hezzy, you crossing folks up, you know, you might Euro step now, you drive into the rim, and then you shoot. Eventually you do all that and you're dunking. Like it's all step by step. But the first day you're in the basketball, on the basketball court, they throw the ball to you, you just shoot, you probably miss. The second day you probably, you know, get a couple baskets. You're not dribbling straight away, you're not driving to the rim, you're not putting out the Euro step, you're not dunking, no. It takes time. You got to know when to do what. Same with the stocks. You got to know when to shoot. You got to know when to dribble. You got to know when to drive to the rim. You got to know how to do that. Same with, you know, AMD. When you look at Tesla, when you look at AMD, when you look at Nvidia, when you look at HIMS, when you look at Palantir that are overbought, you got to understand what you're looking for, right? See, Nvidia is kind of interesting because I expected to pull back a little bit more, bottom out maybe a 121, but it can still go lower. It can still go lower, especially with tech being bearish. It can still go lower. Either way, when it does start rallying, just zoom out, right? Zoom out and see. Okay, yeah, we're quite high up, so it's supposed to pull back a bit before it continues rallying higher, right? Same with the overall market. The markets were topped out. There's no reason that the market shouldn't be selling off. The markets were overdue a sell-off. I think I tweeted that on Sunday or Saturday. I said the markets are due a pullback, due a sell-off because we topped out. Like we were at the high 610, we came down 590, 610 again, 613. We were at high. Markets have been high since December. We need to come down a little bit. It's a healthy pullback. Markets can't just only go up. So it's pulling back now. I still expect a big. We at 594. I'm expecting 589, maybe a bit more. It's all supposed to happen. That's how markets work, right? So yeah, that's. Oh, he said, "Are you sharing screen?" I got a Tesla too early. Yeah, I mean, honestly, it's all just putting pieces together. If you got any questions, let me know as well. By the way, and I will add. So there's a couple guys who threw their tickers in here. Dash and J and J, or a couple folks, I should say. DoorDash, all right. Let's look at DoorDash, okay. It's bearish. Pull back to moving average every time to push higher. The moving averages are now converging. You know, they're coming closer. They're going to cross over, and they are going to drop. DoorDash is going to drop, right? In my opinion, it's going to find the level, maybe where we hit highs before, level of resistance. We got rejected around 180, so an $11 drop. J&J, yeah, bullish. It's going to pull back a bit along the way. Overextended, overbought, but yeah. Even the patterns here is beautiful. Just hit this level of support and we just fly up. If you look at the daily chart, yeah, this is a nice play. You could even call this a kind of inverse head and shoulders, a little bit, not really, but a little bit. Any other tickers you want me to check out, just let me know. What's up, showing off? Tesla app, grab, get those shares. Celsius sold off today heavily. Grab, we'll start with grab. Yeah. 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 This is my setup. Yeah. 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 Look, I could do this. I could do this. I could do this. Yeah. Well, that too. Yeah. Yep. Yep. Even look, so 140, even if you don't get in here, you get in here, you get in here, 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 here. Yeah. Thank you. Yeah, yeah, we almost done it, but Tesla already done. APP. Yeah, this. So funny thing about this is, it consolidated here for a long time. So I would not be surprised to see it app reverse here and just take off. It consolidated here for a long time. So there's a lot of stuff happening at that price point. It would not be surprised if it just consolidates here and reverses. If it does start reversing and pushing to the upside, I will look at getting calls. I like this. He said Celsius. I like app. Like I wouldn't mind getting a call once it just confirms it. Celsius, yeah, we know what happened. Celsius, great earnings, jumped up 30%, pulling back. It has to pull back. I said it has to pull back, but it's going to go higher. Yeah, it was overbought. We know. And I used the RSI just to give me an indication of what could be occurring. Any other tickers, questions, symbols? Can you please explain why you're taking JPM swing play wire put? Okay, easy. Great question though. JP Morgan, right? So financials have been getting hit the last couple of days, right? 9 and 21 death cross, moving averages crossing to the downside. Back to back to back red candles. Weekly, bearish, close below the moving average. It's looking bleak. It's looking like it's going to pull back, right? Now, intraday, yeah, they might have some rallies. They might push up a little bit. Might push up 20 cents, 30 cents. Cool, that's fine. But then we scroll along and go left, go left, go left, go left, go left, go left, go left. Oh yeah, from 280, we've just been dropping. We've been dropping. We've been dropping. We've been dropping. Pushing up to go lower. Good question, though. Thank you. KHC. Keep bringing these tickers. Keep posting these tickers. KHC. So I'm gonna go to my daily first. All right. It's overbought. First thing I notice, overbought. Go to my weekly. Okay. So we might be okay for a swing in about a week or two. Ideally, I'd like to see what price does at the 200 moving average here. If it gets rejected and sells off, or if it breaks above and just continues going higher. These are good stocks, though. Thank you guys for throwing these out. Thank you. I really appreciate it. Yes. Let me know other questions. Let's go. Give me tickers to chart. Let me show you how it enter, right? Okay, let's see. We know on the hourly and the 4 hour what's going on, right? Bullish, bullish, daily, bullish. So first, we just want to see what happens with the 200 moving average, and then we can act. Use the daily time frame, then go down. Thank you. Yeah, of course. Oh, Javon Mincy, you're in the lounge. That is not where I'm at. I'm in the study room. You are in the lounge. That's why you're not hearing anything or seeing anything. Come on. That's why. All right. We are in. Oh, well, I guess he can't hear me because he's not on here. Either way, folks, if no more questions about my entry, my exit, if it makes sense, then that's good news, right? NDXP, let's look at it. NDXP. NDX. Am I? Well, it's the same as NDX. Where can we find this recording? Yeah. NDX. It's the NDXP is the same. I think Robin just Hood has it. It's just weird. NDX. Yeah. Where can we find this recording? It will be on YouTube. If you go to, let me show you the channel. Your RTA. And I'm gonna look at NDX. Your RTA. So NDX, right? Still bearish. Let me draw some key levels, right? So I'm gonna go for the lows here, which is the previous high. See, it was highs here. See, it was highs here, and now it's the lows. So that's one level. Another level will probably be where we was last week, right? Around here, just around that level, and we kind of bounced once, twice, gapped above, bounced again, wicked off again, wicked off again. So that's another level. It's bearish to me. I think it's got another $87 drop, 87-point drop. Yeah, looking bearish to me. But once we get a bounce, we start uptrending, we'll slowly start stepping upwards. But yeah, sorry I had to do this session an hour earlier than usual today. Again, the recording is going to be uploaded and it's going to be online so everyone can have access. But you got to remember though, this is trading, right? We're battling against some of the richest guys in the world. They're doing everything they can to win. Trust me, it's not easy, right? We're going to have ups and downs. You're going to take L's. It's all part of it, right? Either way, I'm grateful to each and every one of you for coming through. I'm happy you guys came through. And if you have any other questions, just drop them in the chat. I will freely answer them. But that's it from me, folks. And if you don't have the stock option starter pack, go grab that one as well. And apart from that, yeah, I will see you guys